Hey everyone, welcome back to Corporate Decoder. Today WGRX just filed an 8K, and I am seeing a strong comeback on one critical metric. Quick note, this is not financial advice, just my take on public filings for educational purposes. Wellgistics Health is getting a second chance from Nasdaq, but a big challenge still looms. Alright, let's dive into what Wellgistics Health Inc. has reported. This is an 8K filing, which is like a public announcement for important company news that isn't part of their regular quarterly or annual reports. The main story here is actually a notice about their listing status on the Nasdaq stock market. Remember, companies traded on Nasdaq have to meet certain rules to stay listed. One of those rules is about having a minimum amount of stockholders' equity. Think of stockholders' equity as the company's net worth, what is left over if you sold all its assets and paid off all its debts. Wellgistics Health had a problem. Back in April, Nasdaq told them they were not meeting this requirement. Their stockholders' equity was a negative amount over $12 million negative as of the end of 2025. This is a big red flag, usually meaning a company is struggling to stay afloat. If a company can't fix this, they can get kicked off the stock exchange, which is basically like being delisted. But here is where it gets interesting. The company has been actively trying to fix this. They've been working on a deal to combine with another company, DataVault AI, to form a new entity called DelivMeds AI. They also plan to buy some patent rights and a controlling stake in another health company called Tollo Health. They believe these moves could significantly boost their assets to around $4 billion and their stockholders' equity to about $40 million. If this plan works, it would put them well over the required $2.5 million in equity. And it looks like Nasdaq bought it, at least for now. They've given Wellgistics Health an extension until the 12th of October of this year to prove they've fixed their equity problem. They have to choose one of two ways to show this. One option is to file a report detailing the deficiency, explaining the deal that fixed it, and stating they believe they are now compliant. The other option involves submitting a recent balance sheet showing that, on paper, they now have at least $2.5 million in equity. The deadline is serious though. If they don't show they've met the equity requirement by the time they file their year and report for 2026, they could still be delisted. This is a common pattern for companies in financial trouble, trying to buy time while they restructure or find new investors. It is a bit like someone trying to fix their credit score to avoid losing their home. They get a little more time, but the underlying problem needs a real solution. Now, there is another key piece of good news in this filing. It addresses a separate issue Wellgistics Health was facing regarding the trading price of its stock. Earlier this year, Nasdaq also warned them that their stock price had been below $1 for too long. Companies need to maintain a minimum stock price to stay on Nasdaq. If it stays below this threshold for too many days, they can also face delisting. But, and this is the good part, on the 9th of June, the company got word that they have fixed this problem. For about 2 weeks straight, from late May to early June, their stock price stayed at or above $1. Nasdaq has officially closed this issue. This is a really positive step because it shows renewed investor interest or stability, which is crucial for any listed company. It is a sign that maybe some of the negative pressure on the stock has eased. Looking at the wider context, Wellgistics Health has a market cap of around $9 million, and its stock price has been quite volatile, trading between $3.04 and $97.5 over the past year. Recent news showed them exploring a significant acquisition and also refinancing debt while raising capital, which are often signs of a company trying to navigate financial challenges and position itself for future growth. The filing is signed by Prashant Patel, who is listed as the president. This filing presents a company in a crucial turnaround phase. They've managed to get a second chance from Nasdaq on two fronts: their stockholders' equity and their stock's minimum price. The upcoming merger and acquisitions are their key strategy to fix the equity problem. If those deals go through successfully and substantially improve their balance sheet, they could very well stay listed on Nasdaq. However, the overall success of these complex transactions, especially in the current market, remains a significant risk. The company is essentially betting its future on these strategic moves. Alright? That is my take on this filing. What is your read on Wellgistics Health's chances of a sustained comeback? Let me know in the comments if you found this analysis helpful. Please hit like and subscribe for more. The research tools I use are linked in the description below. They help keep this channel going. That is my take. Stay decoded. If you like this video, please like, comment, subscribe. And join our Discord community linked in the description.